Hello, this is SeeWing Yee from the Yee Real Estate Network. We specialize in helping out-of-state investors, no matter where you live in the US, in any of the 50 states, to use the methodology, especially if you are a mom and pop investor, to buy cash flow turnkey investment real estate in the best markets in the country. And all you have to do is surround yourself with a team under one umbrella that have done most of the work for you on your behalf. Turnkey, out-of-state, remote purchase system, which have been proven successful for many organizations and investors. So, of course, without further ado, and today on this short presentation, I'm going to talk about the buckets of money, which is very, very critical. So let me share my screen accordingly. And here it is. All right, so it's all about the three sources of earnings, right? So we could talk about the earned income, portfolio income, and passive income. So the sooner and the earlier you could identify the buckets of money and make money work hard for you, then your real estate investment future will be very, very satisfying. Okay, so with that said, right, I mean, you have to realize that you have to make your money work hard. So earned income is wages that you earn, right? Your W-2, you work 9-to-5 job, chasing the rat race. Now, it's good to have a job, but this is a traditional way of earning a living, not necessarily the best way. Because let's face it, your W-2 paycheck, working for somebody, right? You have to work very hard, not necessarily working very smart. And most Americans, their money is like at the end of the month, like, the concept, there's not enough month at the end of the money, right? So the paycheck that you get on a monthly basis that you get paid are taxed at the highest marginal tax rate, 20%, 25%. 31%, it all depends on how much income you make, right? So a lot of it goes to taxes. And, let's face it, we all acknowledge the money doesn't go that far, right? I mean, you pay your bills, you pay your rent or your mortgage or your debts, your groceries. With inflation the way it is, the rampant inflation is eating people's purchasing power, right? So you have more, month at the end of the paycheck instead of more paycheck at the end of the month, right? So you can't, it's very, very difficult to achieve massive wealth just relying on your paycheck. Your paycheck is designed to pay your bills, right? Now, for those of us that, are good with money management, you're traditionally, again, you're being taught about, oh, let's put some money away let's allocate, a certain percentage of your paycheck into your company's 401k, right? I mean, we heard that for many years, many decades, many generations. While that is a good way to accumulate for retirement, it's limited, right? Because this is what we call a portfolio income. The problem with putting money, and if some people may succeed with this methodology, right? Earning portfolio income. Portfolio income is a stock market, mutual funds, but the interest income that you trigger, right, or is you have to pay ordinary taxes, right, on the capital gains or dividend income. You pay ordinary taxes, and when you liquidate your stocks and bonds, from time to time, you have to pay capital gains tax. By the way, I want to give you a disclaimer. Okay, very important. I should have done that at the beginning. I am not a tax or financial advisor. I'm just, if you need to consult with a financial advisor, with a licensed financial advisor to go over your unique situations, right? I'm just an educator speaking on this YouTube channel, all right? So, right, get that disclaimer out of the way. So portfolio income, while is better than, just not putting anything away from your paycheck, is a good start. Is it gonna achieve retirement for most of you guys out there? Probably not. So the last, or the most important of the wealth building source of earning is to become a real estate investor, right? So real estate investor is, the definition is, as you can see right here, is passive income, right? The word passive have a nice ring to it, don't you think? Passive means what? Means working smart, not necessarily working hard. So income from your investment, cash flowing rental properties, real estate, or can be offset by the tax deduction, depreciation, etc. Right? So not only that, not only the income you produce from the cash flow from the renter, paying your, paying your expenses for you, which is amazing. You get taxed at a lower rate if you know how to apply the appropriate tax deductions. Again, consult your tax advisor. So passive income is clearly allowing even on a historical basis is the best way to create wealth through buying a portfolio of rental properties. So I'm not going to spend too much time on this because this is a very short video, but I'm going to share with you another illustration, right? Which is right here. So what kind of property should you buy? Again, if you talk to different real estate guru, you may get a different answer, but all I can say is what you see in front of you is a picture of a typical investment property that most motivated investors out there, mom and pop investor, if you will, should buy, right? And again, if you want to learn more details about our investment methodology, go ahead and subscribe to our channel, or also enter my website and put your email on there to become a free member of our organization. And with your email, we can provide you with a weekly email newsletter to talk about investment opportunities and free education, etc. Right? So with that said, I'm going to conclude this presentation by showing a typical property which you should buy in a market. In those markets that we promote our properties through a turnkey approach where everything is done for you, right? We pick the property on your behalf. We have the in-house property management that can manage your property over the long term. We have the whole team working for you, right? The loan agents, the title company, the real estate consultant at that market. So it's a one-stop shop team approach. So with that in mind, the typical property you should buy are new construction or newer resales. Typical 3-bedroom, 2-bath house, anywhere from 13 to 1,800 square foot. And you want to make sure it's a growing market, and the market that typically in the region of the US is growing and is affordable. And as an investor, you have to buy a property that have the proper rental income projection in relationship to the purchase price. So the best case scenario, a property you're going to buy in this type, as you can see here, this is just one example of many in South and Southeast. These properties at today's price is $345,000. And the projection rent is approximately $2,100. The renter will pay you $2,100. You do your 20% down payment. This is a blueprint for success. You get financing at $2,100. So I'm not going to go through all the calculation. You can see it for yourself. But at the end of the day, when you do a 20% down payment and in a good market for population, job growth, etc. 345,000, you give or take, lower amount, higher pricing amount, most likely lower amount, it'll give you positive cash flow, okay? And potential for consistent long-term appreciation. So these are the blueprint of your portfolio building. Buy one or more rental property in a particular market, diversify your properties, buying single family home, residential investing in good rental markets in the US, South and Southeast mainly. Right, so that's pretty much all I have to say, short and sweet. And the rest of the time is for you to digest this high level information. To recap, you need to make your paycheck work for you. You need to show discipline, be a steward of proper money management, allocate I'm not saying don't do portfolio income, investing in the stock market, 401k, IRAs, whatever, but that for most people is too slow, too limited. But diversify into real estate, become a mom and pop real estate investor that you can be, and then buy a portfolio of single family home rental properties in different markets, and giving your financial goals and objectives, giving the financial resource you may have. Everybody's goals is different, but this is the bread and butter. The bread and butter is buy turnkey, cash flowing, new construction or recent newer resale over time, right? It's a long-term buy and hold strategy. You're not going to get rich overnight. It's a slow, steady process. It's, in a way, it's kind of a boring investment methodology, but boring will get you to your goals, right? Not flashy, flash in the pan, short-term gratification about money. All right. Well, hopefully this helps. Thank you so much for attending. This is SeeWing Yee from the Yee Real Estate Network. Thank you for listening and have a nice day and good luck in your financial future. Bye-bye.